Alright everyone, welcome back to the channel. Today, we're diving deep into a tech titan, a household name, Alphabet, or as most of you know it, Google. Now, before we jump in, let me ask you a question. Imagine you could go back in time, just a couple of weeks. You see Alphabet stock sitting there, maybe not doing much, and you decide to pass it by. Well, let me tell you, you could have missed out on a massive opportunity. Because here's the thing, Alphabet just absolutely crushed it with their Q1 earnings report. We're talking blowout numbers, exceeding analyst expectations by a mile. Revenue surged by 25% year over year, driven by their core advertising business and a surprise star, Google Cloud. This wasn't just a one-time thing, folks. This is a company firing on all cylinders. They announced their first ever dividend, a game-changer for income investors. Not only that, they unveiled a whopping $70 billion stock buyback program. That's a huge sign of confidence in their future, and it directly benefits shareholders by reducing the number of shares outstanding, potentially pushing the stock price even higher. And speaking of stock price, well, let's just say it went ballistic. After hours trading on the 25th saw Alphabet's stock surge over 10%. That kind of momentum could position it for an all-time high opening on the following day. Now, this performance isn't coming out of thin air. Let's delve deeper into the numbers. Alphabet raked in an EPS of $1.64, handily beating analyst estimates of $1.59. Revenue hit a staggering $68.1 billion, exceeding expectations. Their core advertising business remains a powerhouse, with revenue climbing by 23% year over year. But the real surprise was Google Cloud. This cloud computing division is growing like crazy, with revenue jumping over 40% compared to last year. Analysts are practically chomping at the bit to revise their ratings and price targets for Alphabet. This kind of financial performance is a surefire sign of good things to come. But hold on. It's not all sunshine and rainbows. We gotta talk about the industry trends too. The tech sector as a whole is experiencing a boom, fueled by factors like the ever-increasing importance of digital tools and the cloud revolution. Alphabet, being a major player in this space, is perfectly positioned to capitalize on this growth. Speaking of the cloud, this segment is absolutely exploding. Google Cloud is a major force in this market, and its rapid growth presents a significant opportunity for Alphabet. However, competition is fierce. Tech giants like Amazon and Microsoft are breathing down their necks with their own cloud offerings. Looking at Alphabet's stock performance, it's clear they've been significantly outperforming the market recently. We're talking a healthy 15% year-to-date gain, which is impressive considering the broader market trends. With the Q1 results exceeding expectations, analysts might just bump up their price targets, potentially leading to even more gains for Alphabet shareholders. Here's something exciting to consider. Some analysts believe the stock could reach the psychological price point of $200 soon. That would be a major milestone for Alphabet. Let's not forget that this recent surge is a turnaround from a slight dip the stock price experienced earlier in April. So, what does the future hold for Alphabet? Well, analysts are generally very optimistic. Alphabet's core businesses are strong, Google Cloud is on a tear, and their investments in cutting-edge technologies like AI and self-driving cars have the potential to unlock massive future growth. Of course, the stock market is a fickle beast. Unexpected events or broader economic trends can always throw a wrench in the works. Additionally, increased regulatory scrutiny in the tech sector is a potential risk factor for Alphabet. But despite these potential roadblocks, the overall outlook for Alphabet appears bright. They have the momentum, the financial muscle, and the innovative spirit to keep them at the forefront of the tech industry. So, what does all this mean for you? Well, that depends. This isn't financial advice, and you should always do your own research and consult with a professional before making any investment decisions. But what I can tell you is this: Alphabet is a company to keep a close eye on. They're a leader in a rapidly growing industry, and their recent performance suggests they're not slowing down anytime soon. If you enjoyed this deep dive into Alphabet, be sure to smash that like button and subscribe to the channel for more insightful tech content. Don't forget to share this video with your friends who might be interested in learning more about